you first on board, of course, we have this little checklist, and this sort of guides you through the main processes and the order. Obviously, you only see the tanks that you've selected, but you can sort of upgrade and trial things at any point in time, of course. The dashboard, to give you a little bit of an overview, this is sort of where everything pools. I mean, obviously, we have property, we have work, we have sole trader and holdings, which is shares and cryptos and non-listed assets as well. And they all work together or separately. And they all kind of pool. Oh, sorry, you're talking to me? But they all kind of pool here. And they calculate within their own functionality to be able to produce the taxable income and your estimated tax position. Actual is as you're allocating throughout the year, so it's sort of up to that current point in time. Forecasted is forecast, of course, when you're adding properties or other incomes, we will utilize that information to calculate tax in real time. So you can kind of see where you're going to be, and then you can sort of take proactive steps, I suppose, to reduce how much tax you pay, which is kind of everyone's goal. You can invite your accountant, any accountant. You can invite any advisors that you like as well. One accountant, but there's no limit on advisors. And of course, support if you need to talk to us. And we have some budgeting tools, which, yes, some people like budgeting. It just makes me feel bad about myself. But we're actually going to be expanding out our budgeting functionality early in the new year with a money tank, and we'll be adding things like goal trackers and there's other sort of saving metrics and actual versus budgeting variance reports as well. Within the system, you can move backwards and forwards throughout these years as well. And each year, we're obviously grandfathering all of the tax legislation, any provisions, we're sort of locking it all away. So as we kind of progress, you can sort of have that full history of where you were, and calculating CGT and things is obviously something that we can do at any time with real data. From a navigation perspective, the top right stuff, that's obviously settings, and there's some other little general information that's handy to add, things like, do you have private health insurance, dependables, because we can use that information to calculate your tax in real time. So then let's just stuck into the property tank. So that's okay. This one. It's fine. So the property tank is broken up to 3 different sections in here. So we have the portfolio value, the borrowing power, and the property map, in case you forget where your properties are. But this section is something that will provide information irrespective of ownership. So regardless of it's your principal place of residency or properties in trust or in your own name, we'll kind of pool everything here to give you a overarching view of your loan to value ratios and your net surplus ratio, borrowing power, so you can have those better conversations before you get to the bank, and of course keeping a track on that average interest rate for you as well. Within this borrowing power report, you can kind of open this up and play around with it. So here you can kind of choose which properties you want to include from a security perspective. We're sort of pooling all the information from live bank fees, and you're able to edit these amounts here as well. So if you're thinking about buying a new property, you can add in what your proposed monthly rents and loan repayments would be to see how that would return for you on a serviceability aspect. And you can also play around with the salaries and spouses' salaries and other liabilities and living expenses to really provide that overarching view as to what you can afford and what you can't afford, or what proactive measures you need to take to be able to get to where you need to be. So then we kind of move down into this section, which is really breaking things down into the portfolios. So obviously all portfolios, and then the individual ones where we've added them and attached properties. Throughout the whole system, we're looking at market value, equity, tax and cash, and then down at the little property levels, we're looking at rental returns as well. These loan informations, they all come from live bank feeds, and so they're updated every single day. To show you how add properties work, so in here, you can just choose a property. This is all coming from CoreLogic, and then you would select a portfolio. So by default, we have a few portfolios in here. Just to sort of run through them, vacant land is is obviously the ATO took all the fun out of land a couple of years back and are making us capitalize all of our expenses. So that portfolio will actually do that. So you can still allocate and you can do the things that you need to do. However, the system is storing those as capital expenses, and we sort of pull them as holding costs for the longevity. And then when that property is built, you can just move it from the land portfolio into an investment portfolio, for example, and then the system will start incorporating that for tax. However, all of those holding costs will be pulled across with it, so they're never lost or forgotten for the longevity, which is sort of important for CGT. We have a trust portfolio, and this is really working the same way as investment portfolios, except for we exclude it from the tax position. Share properties is the same, except for we have an additional calculator so you can work out what that exact claim is. And when that changes at the end of the year, when you get the statements, you can adjust it and all of the expenses will adjust accordingly for that financial year. SMS fund, that's one that I added, and I'm going to show you how to do that in a second. Owner occupied, same as trust, you can capture what those expenses are and include them in your loan to value ratios, but we obviously exclude it from tax. And then the investment portfolio. So that one is the main one, which will obviously calculate all of those properties and include them in tax from a tax perspective. So I'm going to choose investment today because we like those. And I'm going to put in my ownership, my contract date, my settlement date, it's very quick settlement, and my purchase price, my market value, at least, right, rental income, expenses, and these rental income and expenses can be adjusted at any time. Interest, God, that would be nice. And then depreciation, but you can pull these off your tax return. So once you've entered them, we use CoreLogic for our growth percentage. So these are the 10-year rolling averages for houses and units. And because we know that not all things are equal and we don't want to tell people what their stuff is worth, so you've got the flexibility to increase or decrease based on the information that you know. Once you do that, then this little property is now added. And if I went to my investment portfolio tab, of course, it's still going to be there. So from here, we've got a few options. If we'd owned it for a while and wanted to see what the CGT looks like, we can sell it. And we can also move the properties. So this is the functionality that I spoke about before when potentially I had some land and then property was built and then I could move it directly to a investment portfolio, securing what the market value is at that point in time. And obviously you've got a full history of that from a tax compliance perspective. I'm just going to jump into this guy because he's got some data already. Actually, I'm not. I'm going to stay back into this guy so I can, so I can show you. Okay, so in the system, of course, everything kind of looks the same. You can attach photos of your property. We like photos. It was designed by girls, you can probably tell. And obviously we can sort of customize these different properties to make it look and feel how you like. From each property, you can add income and expenses. Bank feeds is obviously much quicker and we've got the real functionality there, but cash receipts and things are very prevalent. So from here, you can enter cash. Like for example, if I bought some materials and maybe they were $500. Sorry, general repairs. So all of the categories within the list that are available, they're all reverse mapped to the property schedule. So all of the ATO compliance is sort of taken care of. We've got additional categories to make things easy, but they all sort of filter back into the right spots. And of course, you can attach receipts the whole way through as well. Let me attach a receipt. Okay, and then I can save. And so what I'm doing then under this category, and as I add more, the categories would just pull, and then you can sort of drill down into the transactions that sit within each category. I can edit things from here. I can delete it if it wasn't real, and I can have a look at my receipt. And all receipts also go into the spare tank, which I'll tell you about in a minute. We just have a question. Can old data from Xero be placed in the history section? Yes. So if you've got information from Xero or anywhere actually, so we've got a spare tank because we just thought that was kind of cool. And so in the spare tank, you've got the customization of folders. So you can create folders, you can edit the ones that we've already put in there, and you can attach as many documents as you like. So you could create a folder called, zero history. And then you could attach all of those. You could do it by financial year. You've got full flexibility. While we're here, and so the receipts that I was telling you about, even though we save them with transactions, we also save everything here because it's just painful to have to go and find things. And if you want to sort of, you bought an oven 3 years ago, it's much quicker to come here and search it than it is to sort of go filter back through different property expenses. And of course, for property, because that's what we're here about, whenever you add a property, we create a custom folder for that property. And so you can attach receipts here, so which would be things like depreciation schedules, loan documents, settlement contracts, all those sorts of things. And we keep all this data, and every financial year we just roll it forward. And obviously that provides that longevity for the kinds of things that need to be kept for a long time. Okay, back into 56 Footy Street. So that was expenses, which are pretty straightforward. If I was to add an expense here, for example, for council rates, I'll add one so I can show you when we get to bank fees, because sometimes I'll add expenses before I pay them. Maybe they're not due for 6 weeks, but I want to get them in the system. So I could add in my council rates or any expense really. So I could add it in here and then I can match it in bank feeds once I've actually paid that transaction. Income in TaxTank, we've kind of done it a little bit different. We're working to integrate with some of the big rental people, but they just are difficult to deal with, and it's a work in progress. But for now, the way that it works is net to gross. And from bank feeds, we populate all this information, but just to give a bit of background. So maybe this is my net amount. I was paid $2,000. It was rental income for July. And then we manage the add backs through adjustments. So for example, management fees, no one gets away from those. Pest inspections seem to pop up all the time. And so whatever those deductions are on your rental statement is what you would add as an adjustment here. If it's recurring and you have that same sort of rental income by standard, you can create a rule for these as well. And then it's just a matter of making sure that the gross income amount matches. You would attach your statement and you would save. So what we do in the system is obviously record the gross amount under income and the claim percentage as per my ownership that I entered to work out what that taxable component is for me. Back on the expense tab, those management fees are being created as an expense here, and also the pest control that I added. So tracking the gross and the expenses associated with every rental income statement at the same time. Depreciation, one of my favorite things. In the system, obviously you have the option to choose diminishing or prime cost, and all of the tax logic is sort of built behind that. But assuming diminishing, this little pop-up will give you the option to choose category. All of this is sort of linked back to the ATO rates and useful lives. Keep them happy. I would enter in a description and an amount and a purchase date. It doesn't matter what year it was in. We'll calculate depreciation backwards and forwards. And obviously the closing balance. The closing balance you can adjust to make sure that it matches with your prior year opening, because some accountants do different things, and we just want to make sure that our schedule picks up correctly from that point in time. And we can save receipts if it's a new asset, and we can save. So in the system, then you can kind of drill down into everything to see what that schedule is. And because I chose diminishing, what we will do once that asset falls below $1,000, we will automatically start, we'll move it into the low value pool and start accelerating the depreciation at the low value pool rate. Same like if you bought an asset under $300, we would automatically write it off. So that's sort of the whole list, and obviously they go on and on. If you were to replace something, you can just find that asset, you can edit it, and you can write it off. So maybe I wrote it off today. I had to replace that aircon. So now it's moved into the written off. So you're basically writing off the residual for that particular asset, and then you can add the replacement in the same way. Building and improvements is the other component for depreciation. Obviously, building at cost is a nice straightforward one. And we add those descriptions. You'd be checking what the closing balance and the opening balance is, and you would be saving. The whole way through depreciation, you can see what the current year claim is, but also the prior and the next year. So you can sort of make some planning decisions as well. And the other thing we built into depreciation for those DIY projects to make sure that all of those expenses are captured within that same depreciation pool. So we have a structural improvement category and the ability to add improvement groups essentially. So if I was to do a kitchen reno, maybe I started that last year. I would just choose which pool it was, and then I would start to put all my assets in. So maybe it was $3,000 for some benches, and I would save that. And just sort of showing you, so this kitchen reno has now appeared under our building and improvements. And then as I continue to have expenses for my kitchen reno, I would just continue to add them. So maybe it was some very expensive tiles. And so what we're doing here is we're creating a total cost for this reno project so we can keep track of it. But more importantly, we're sort of sub-listing those additions to be able to monitor and see how they're going as well. So that's pretty handy for DIY lovers. And obviously we sort of manage that. So every year that will just roll forward, and the only maintenance really is anything that you've replaced or any new assets to add into that list. Is there any questions so far?
What if you have a depreciation report already? Do you just put in the building as per report, the construction cost 158, and just pick up the depreciation year to date as opening balance, and then it will roll at 2.5% or 4%, whatever it is?
Yeah, correct. So, I mean, for me, if it's a brand new property, then I would work straight off the depreciation schedule because there's no variance. We know that. If it's not a brand new property, I would be adding depreciation off the schedule from my tax return because things change and you sort of buy and you add. So that depreciation schedule changes from its original format. But I'd be relying on the tax return depreciation for subsequent years. And then you enter them once and then obviously that's it except for any changes going forward.
For building improvements or building write-off, it's fairly easy. But depreciation schedule sometimes can have new assets like aircon, whatever, kitchen, whatever. Do you have to input each item separately, or can you somehow input just depreciation for the year from BMT tax report, blah, and then add additional items?
No, I didn't do that for a couple of reasons. So it's an accountant's worst nightmare to sort of get those pooled assets because you can't manage them and you can't maximize depreciation via that because things do change. You will replace ovens and you will have new assets and there's tricks that we can do too with regards to accelerating depreciation once assets fall below $1,000 or things that we can write off under 3. So if we pool them, it provides no flexibility to manage or automate that for you either. So I know it's a little bit of work to add these things, but it definitely provides a bit of tax result and also assist with that compliance component as well. But it would be it's just not a good way to do it. Quicker, I know, but not good. So I'm going to come back and I'm going to show you equity because I haven't attached any loans to this property yet. But if I jump into this guy, and I'm just going to unsell him just for this purpose, we'll show you that later. Okay, so equity tab. We are actually expanding our offerings through CoreLogic. So in the next few weeks, you'll see some update buttons here. So at any point in time, you'll be able to update your market value, viewing the CoreLogic, recommended market value and their confidence range. So then you can kind of choose the market value based on their data. And same with the growth percentage. So at the moment, we update that every quarter, but you'll be able to view and update that as you see fit. Very, very shortly. That'll be in a few weeks. So once again, the loans come from bank feeds, and I'll show you how to attach those shortly. And at the moment too, as valuations change, if you have an appraisal, then obviously you can attach those manually and keep any documentation that are associated with those market values. And then we have the property tab. So I'm going to start from the bottom. So forecasting, these were the details that I added when we created, not this property actually, but the other property, but same thing. So I have full flexibility to adjust my rental income forecasts or my expenses to ensure that my forecasts are kind of accurate. And rolling forward into next financial year, we'll use the prior year actuals as that opening data, and then you can come in and sort of make any adjustments based on the information that you know. Shared with, in TaxTank, you can share properties with co-owners. So you can invite them as per their ownership, and they can accept, and then that property will appear within their TaxTank account. They don't have to maintain it. As you're sort of allocating, their data will update in real time as well. Bank accounts, this is a property I added earlier. So these loans are actually linked from bank feeds, which we'll come back to. And then just the basic property details. I mentioned land earlier. So if this property had previously been land, I would have had holding costs, from that land, whether that's council rates or mowing or whatever it may be. They would all be pooling there. And of course, capital costs. We get a few questions about this. To add in your capital costs, it's actually this little edit icon. And from here, you can edit the address if it was, entered incorrectly for some reason. You can edit any of the original details. And here's where you would add in your stamp duty is, your legal fees, or any other capital expenses. For example, buyer's agent fees would be one. And you can upload all of the documents which save in that spare tank property folder that I showed you earlier. Sell property. This is a cool little feature to enable you to get a quick understanding as to what the tax implications would be should you be contemplating selling a property. We break it up into 3 steps, which we tried 2, but 3 was sort of the easiest we could make it. The purchase details and the capital costs, and same for depreciation, structural improvements, and the holding is information that we know in the system. So we can pull all of that and calculate what your cost base is. The second step is the cost of sales. So for example, if I'm going to sell this guy for 800,000, maybe it was, my settlement date was a month later, I would put in my commission, they're expensive, and other costs. And what I'm doing here is calculating my capital gain or loss as per my ownership. So if all things were constant, I've got 193 grand to deal with. The next step is the exemptions and concessions. So within the system, we know contract dates, so we know whether or not the 50% CGT discount would apply for this property because it's in my investment portfolio. There's all the other situations as well, sort of if your main residence became an investment property or partial exemptions. So you have some flexibility with these things. Obviously the 6-year rule, if this property was in my home or my principal place of residence portfolio, then I would have a full exemption coming here. But yeah, you can kind of muck around with these things to understand what that's going to be and how it's going to implement the tax. And when you save, so obviously now we've marked this one as sold. And if I jump across to my tax summary, my left-hand menu, now I can sort of drill down and I can see that I've got CGT, I can see which property is, and I can see what my concessions applied are. If I was just joking, I didn't really want to sell this property, then I can just come back in here. I can enter, and obviously I can undo that sale. So it's a nice sort of what if scenario to be able to, keep a track on CGT if that's what you're looking to do. We can view in different ways, people that have shared properties with us, inactive properties if we sold stuff. And we can also create custom portfolio using that manage property widget. So if I jump across to my portfolios, this SMSF one I added earlier, so I can edit or remove that, or I can add them. So maybe I want to monitor my, New South Wales properties, keeping track of things for land tax. The trick is whether or not it's held in your name or held in another entity, because that's going to decide whether or not we include it in tax. and if you're going to be letting it out through Airbnb platforms, for example, because we can include that additional calculator. And I can add that. And so then back on my property tab, if I was to add a property, now that New South Wales property portfolio is there for me to use. Is there any questions about the property tank before I jump into bank feeds?
Nicole, just one on the selling properties. Is that how you would do like a hypothetical if I sold it for this much, and you'd play that scenario out with what you just demonstrated, and is that hypothetical, and then it's not real? Yes, you'd get rid of it until, or is it like in terms of predicting?
So it's a real thing. So all of the tax logic and the calculations are real. So
Yes.
So if you really sold a property, that's what you would do as well.
Of course.
But yeah, and not trying to get rid of accountants, but they charge a lot for very little sometimes. So it's a nice way for you to be able to do it by yourself without having to rely on other people. But yeah, it's real. So it calculates tax really.
Yeah. I guess I'm thinking like if we're doing that strategy around, okay, if we sell it in this financial year versus next, what's the implication then on capital gains and all the different moving parts? Just sort of playing that out.
Yeah.
It sounds like that would be the process to get an estimate of the implications. You would follow that
Absolutely
process to kind of
look at that,
the
and
implications would be.
Yeah, you can, because it's based on your ownership. So CGT is the only thing that we don't share through co-owners, because you have relationship breakdowns and you have all sorts of drama that happens. So this is the CGT specifically calculates the impact in your tax return.
Yes.
So in this summary section, so this is what would happen. So if you had, sole tank income and stuff, for example, you would see what your income is, what that CGT is, and then obviously combined, what that does to your tax position. So then you could, add in some random expenses for superannuation, for example, and sort of start to play around with how you're going to pay less CGT. Or, should you hold it off until another financial year, for example, when your income's going to be a bit less. You have actual in the tax summary, but you also have forecasted as well. So you can kind of muck around with that data.
If you wanted to print the capital gains tax summary, how do you do that?
So in reports, hang on, I'm just going to go back and sell this property now so I can show you something. Let's sell this guy. How much are we going to make?
1.2 million.
1.2 million.
All
right. 1.2. Let's have a good day. $50,000 commission, right? And I'm going to take that 50% CGT because I'm going to need it. Okay, and so then obviously that's showing up now in my tax summary, but in my reports, sort of jumping past bank feeds, but we have all of these general reports, which I'll come back to be able to view your data in, a million different ways, including net assets, which lets you view all of your assets, but also your share. So if you do have co-owners, you can sort of see what your part is. And then we have this CGT report. So this is probably our most complex report throughout the whole system. We manage not just property in real time, but shares and cryptos and non-listed assets. And every time you make a sale, we will recalculate CGT to make sure that it's optimized. Any losses are applied to assets held less than 12 months and all of those smart little things, we'll automate that. But here's the property that I just sold and made a good whack of money on. So you can kind of drill down in the system to be able to see what the data is. Your accountant as well might want to have a look at that. And then these would pull with any holdings to calculate this report summary. So obviously 3 parts, seem to like threes in around here, but we have the current year capital gains, which is sort of broken into assets held more or less than 12 months. We have the losses. You can add any opening balances in the general tab, and we will incorporate that in conjunction with any additional sales that you've made throughout the year to calculate what your CGT is, applying any discounts to sort of get to that result. All of our reports are exportable in PDF, and then all of the bigger ones, transactional data, you can export in Excel as well. So so you can come here and you can do that. It's my favourite report, that one. I hate CGT. All right, so let's jumping into bank feeds. So the system is kind of designed to function easily from bank feeds. Because I've got all tanks in this demo file, you kind of see the banks broken up into all. We are open banking compliant. So we use Basic as our aggregator for bank feeds, which gives us about 180 banks and institutes. There's some latecomers, you know, First Mac and stuff that aren't really a bank. So we still have them available, but we just can't pull that live data. So you can do imports for those ones. But the bulk of them we have, and we'll bring transactions in every single night. One I prepared earlier. So in that add banks, you know, you'll see a manual bank icon, which is just one that we've created. And we utilize that for demos, but you can also utilize it for anything that isn't available yet. You know, we've got all these little sub lenders and stuff to be able to keep track of them too. And some people don't like open banking, so, you know, they like to do things manually. But yeah, so I've attached a couple in here. Just to show you, I'm going to give a loan to one of these accounts. So the thing to remember with open banking, you don't need to fill in all this data, it just pulls through. But for the purpose of the demo, I just want to show you how it works. Loan 2. And maybe my loan is going to be 300 grand. And it's going to be for property. So it could be for more than one property. So, you know, maybe it's 50% for this one. And maybe it's 50% for this one. So you can kind of split it. And what that will do, and you can do this as well when you're allocating from real banks, but it will allocate the equity as per that percentage, or for the equity calculation. None of this data you would need to enter if it was a real bank. You know, it's not interest rates. What is it going to be, like 7%? Available to redraw, frequency. And we use all this data for forecasting equity, commencement date, repayment type. This all comes, we get this information from open banking. Okay, and so now I have this loan here. If I select these 3 dots, I'm on any bank. You can edit the name because maybe that doesn't make sense. So maybe it's, you know, whatever makes sense. So you can edit the bank names. Because it's a manual bank, I can edit the bank balance, but when you choose a open banking or, you know, a real bank, you can't, because that comes straight from actual data. And the allocation. So, you know, if I made a mistake, or maybe I've refinanced, or maybe I've sold a property or bought a property, you can sort of muck around with the allocations from here as well. All right, so bank feeds. I'm going to start with a loan and show you a few things. So anyone who's familiar with Xero will be familiar with allocating. We haven't sort of recreated too much. We've tried to keep it very intrinsic. So on the right-hand side, you can allocate. So within the system, we actually have compartmentalized the different tank chart of accounts because they're all reverse mapped into the individual tax return reports in the correct way. So for property, even though I've selected this property as a default, I can of course choose any property, and all I need to do is choose the category. So if it was rental income, for example, I then see that pop up to add rental income that I showed you earlier. The only difference is now we've pre-filled these top fields. So all I need to do is add in any adjustments, you know, whether that's my management fees or whatever that may be, and I would save. And as I'm saving, just to jump back into the property, I think it was this property, then of course, you know, now I'm starting to get that data just pooling the same way it was when I was adding these things manually. Rules, so allocating. Transfer is if I was transferring money from one of my bank accounts to another. So for example, mortgage repayments. So I would choose transfer, and then I would just choose the bank account that are related to, and I will just okay. And what we do when you transfer, we look for the matching bank transaction in the other account, and we allocate both at the same time. If we can't find it, we'll give you a message saying, hey, you know, are you sure? Can you check? Because we can't find that transaction to match them up. So that's on that side. Find and match is the functionality if I've already entered something into my property tank and I just want to match it up. Match invoice relates to the sold tank, which we can run through later. Delete is only here because these are all manual. Alternatively, on the left-hand side, I've got the ability to allocate things in bulk. So I could search interest, for example. I can select everything, and then I could use this pop-up down here to allocate my interest in full. But besides that, we've got rules, which we kind of like. Let me get rid of that so I can show you. So if I was to create a rule, I have the ability to choose an expense rule, an income rule, or a transfer rule, which is sort of those three main functions within the system. And I'm going to call this my interest because it is. I can choose whether all of these conditions have to be here or just one. I can also remove one because interest changes, so I don't want to base it on that. And if it's big, I can shorten descriptions, so only the recurring part will be there. For example, Bunnings, you know, you can kind of take everything out and just leave Bunnings there and say, if the description contains Bunnings, you know, this is what we want to do with that. So in this instance, interest, and it's for this property, and it's going to be interest on loans. Once again, I've got the ability to split transactions, if that's the case, and I'm going to show you that in a sec. And I can press this, well, once I do, I'll show you. So now my interest rules, and any rules that you've added will display here. But even better, I can obviously auto allocate these rules as well. And so then what will happen is every night when they come through the system, they will auto allocate. So let me just refresh. I can show you those quickly. Okay, and now you'll see that they're gone. Likewise, we can do the transfer. So this one, this time I'm going to auto allocate it. I'm going to say transfer, loan repayment, and it's going to be my offset account. Okay, and you get the notification, good news, your bank transactions were auto allocated and they're gone. Where do they go? That's a good question. So they go into this account transaction tab. And so everything that I've allocated is going to pull here. If I made a mistake, you know, I can select this redo button, and that will just bring it back to the reconcile tab to do again. If I've got heaps of rules set up, I've got the option, you know, maybe they're auto allocating and I just want to check and see what's happened. You know, I've got the option to flick this switch, and that will show me the stuff that has happened without me, and of course, sort of excluding things that you've done yourself. Bank rules can be edited from here. You can add rules from here as well if you want to, but you can also edit from here. So I can, you know, edit my rule here as well. The other thing to know about the system is loan details. Which property? 26 real estate. So if I go into this loan details tab, if this was a real bank, my interest rate would be updating daily. You know, we pull it daily because that's how fast we work in Australia. So, so you're able to sort of keep track of what those things in real time are. Loan amounts, principal. So you've got some variables here that you can adjust if things change with your loan, you restructure it. But more importantly, borrowing expenses, which is one of those most commonly missed deductions. So here I can add those, you know, lender's mortgage insurance, who doesn't love that, you know, whatever that may be. And I can update. And this loan commenced on the 1st of July 2023. So we know that there's still borrowing expenses within that 5-year band. So now that I've added them, if I jump back into that property, 26 William Street, and onto my depreciation tab, now I can see this borrowing expense option, which is, it's not really depreciation, it's amortization, but we've put it here because it makes sense. And then I can drill down and I can see, you know, what those claims are going to be over those 5-year spans. If I was to refinance this loan at any point in the future, so maybe next year I refinanced it. So in the system, we have a refinance option. Not in the manual one at the moment, but and what will happen is any residual borrowing expenses will be automatically allocated and claimed in that financial year. So then in your new loan, if you have any borrowing expenses, you can add them and start that schedule again. So that's pretty handy. Okay, so a question that we get is if I have a brand new property, what happens to my loan drawdowns? So I'm just going to take that back. So in this particular loan for land, appropriately, so obviously we have a few of those establishment costs. The borrowing I would add straight into the loan details. So all of these expenses I would be adding to it's that one, I would be adding to a category called loan drawdown, appropriately named. If I had an old loan and I was paying it out with a new loan, I could use the transfer function to be able to match those off. But the loan drawdown category will just allocate them as sort of one of those establishment of loan lists as opposed to an income or an expense. And then obviously you would be adding any of those capital costs into the capital section within the property and any of the borrowing expenses into these borrowing expenses, so we can calculate it over 5 years. What else can I show you? So jumping into the offset account, you can create rules for anything that's recurring. So for example, council rates, I could create rules, whatever that may be. And once again, this might be council rates. I'm going to auto allocate them. I'm going to get rid of that because it's going to change. I don't want to have in all of that. I just want to keep in the part that's going to be consistent. So it's going to contain, maybe it's this property. And so the idea is, sort of as you're starting that initial process, creating rules for all of those recurring things. Insurance would be another one. Rental incomes, for that standard month where you don't get those surprise expenses, you're able to really automate a lot of what you do directly from bank feeds. And then when you log in, it's really sort of simple to keep things up to date. Yeah, you can search things, undo things, do things. There's a lot of functionality to play around with. And, we've got lots of cool little tutorial videos to sort of remind people, how that works as well. Is there any questions about bank feeds? Oh, hang on, I haven't done split. Let me show you that. This is why we keep her. All right, so just jumping into just an offset account. So if I'm just going to pretend, well, actually we'll come back to that one. I'm going to select this expense, Foxtel, and I'm going to say that it's this property as well. I'm going to say it's internet. But maybe it's not really, we know that it's really someone else's. So I can say, all right, but this relates to 2 properties. So really only $150 relates to this property. And so then what will happen is $150 of that has been allocated to property A. And then I can see that I've got 150 allocated of $311 bank transaction. Then I could allocate the rest to property B. So maybe it's this one, and it's internet, and I can allocate. And so the whole way through, you can create rules for those things, but it's a little bit of flexibility when, for example, maybe it is Bunnings and you have bought materials for multiple properties, or maybe some of it's for your property, so we can sort of calculate the claim correctly. This one, for example, if we assume that it's a new oven, I would select which property it's for. I would select the oven category, and I would allocate. And because the system knows that this is an asset category and that this is over $300, it automatically populates the depreciation pop-up. So you can just check these details and you can attach your receipt and you can save. And then we're actually building out, which property was that I chose? I think it was this guy. Oops. There's my oven. So it's actually sort of adding to my pool of assets for that particular property directly from bank feeds. So for adding those initial schedules, you would do that from here, but anything that you've bought subsequently, you can do directly from bank feeds. Is there any questions about bank feeds? No? All right, let me get into tax reports because that gets everyone excited. Okay, so we've sort of touched on the CGT report. So just to start at the top, the net asset one we had a look at, the income and expense report is a new report that we've added because people wanted to have the ability to view last year, which is kind of helpful. So you can fully optimize this report, put in the months you want to see, take out the months you don't want to see. You can drill down into everything at any point in time, but more importantly, you can keep track, and this is helpful for accountants too. So if you've claimed something last year and it's not there this year or vice versa, they can kind of make sure that everything is there. You can then drill into different properties, to sort of customize any export list that you're wanting to look at. And of course, this exports in Excel because it's a big report. We also have the transaction report, and this one's kind of handy to see what's been allocated to a specific category. So for example, I could choose interest on loans, and then I could have a look at all of my interest transactions here to keep track of them. Or I can sort of drill into a particular property, and sort of see what relates to what property and, what doesn't, which is kind of handy, especially if you're looking for something or if you've allocated something and you're not sure where it's gone. The My Tax Report is for those self-lodgers. The ATO won't play with us for an integration at the moment. We're working on it. But in the meantime, if you are a self-lodger, we've built the My Tax Report within the software, so you can plug and play by their item categories quite easily within the system. Property schedule. So this won't be unfamiliar to anybody. So this report is the standard ATO report. We just think that theirs is ugly. So we've tried to make it a bit prettier than that, but it works in the same way. It's looking at what the total amount is, income and expenses, the claim percentage. So for this property, the claim amount is by ownership share as well. So you're able to sort of break up and see what that looks like. I know some people, partners or whatever, if they're not calculating other tanks, they can have one account and sort of utilize these schedules for both people, which is handy too. But yeah, this is sort of what your accountant will come in and view and review and export as well as a worksheet, which should save you some money at tax time. Well, that's what we tell them anyway. The depreciation report, once again, it's really sort of that ATO standard format, but it kind of gives you that breakdown in the same way. I don't think we added anything into the low value pool. No, we didn't. But if we did, that low value pool report would be there. And of course, the CGT report, which is the same as holding tanks. The only difference when you open it from there, you'll be on the property tab automatically, but it's the same report. Yeah, is there any questions about anything we've gone through so far? One question that I should go through on the settings tab, I sort of mentioned earlier about capital losses and things. It's always a good idea to come here and, sort of add in these details. If you've got private healthcare, any dependents, if you've got a student loan, because we'll incorporate all of the tax calculations. God, who has a $2,000 student loan? That's a bit cheap. Once enough, I've got a spouse and annual income. You're going to have a really wealthy spouse. And yeah, so those are actually sort of incorporating into my tax summary. If I've got some capital losses from prior years, here's where I would enter my opening balance. And then as we progressed into later financial years, after any calculations, we'll be carrying forward the closing balance from the current year. And any of your tax information, and obviously if you change any user data, that's sort of sitting down the bottom. As far as subscriptions are concerned, so that's on this tab. Under the property in particular, we've got a few, but yeah, look, maybe I was just mucking around. I can sell a property from here or I can deactivate it. And so you sort of got customization. So maybe you added something, you just wanted to see what it would look like in your tax. You can kind of put it in, play around with it and turn it off if you wanted to. The only other thing that I don't think I've gone through yet is users. So from the user tab, here's where I could invite a co-owner. And they would get an invitation to share that property in their TaxTank account. I can invite my accountant from here. My accountant can also invite me, by the way. I think we've got a Debbie in here. Debbie. So then if I was to invite my accountant, Debbie's going to get an invitation that I want to share. And once she accepts, then she's going to have full access to my account for tax. So there's no backwards and forwards at tax time with data anymore. And of course, advisors. So whether that's your mortgage broker, your financial planner, your property group, whatever that is, you can give them access, or you give as many access as you like, and you can take it away, whenever you're ready as well. But yeah, any help articles. We have a full range of video tutorials. So we've tried to keep them fun and short, but there's a lot of very specific helps with regards to creating custom categories or budgets or whatever you're looking for. But in addition to that, TaxTank support. In TaxTank support, we have a lot of other little articles, little short articles, not necessarily videos, to be able to search. Maybe I want to edit a forecast. So I just type forecast, then I would see what all of the articles available are. Failing that, then I can, of course, send a message to customer support. We are real life support around here, so so you're actually able to have someone that can help you, not just about the software, but you know, with tax in general, to be able to help on board or whatever assistance you need within the software.